Will the US dollar decline over the next 12 months? And if so, how do you trade it? Let's talk about that and more right now. Hi Forex traders, Andrew Mitchem here at the Forex Trading Coach with video and podcast number 377. Now I held a webinar just this morning and it was a free webinar for the public to attend. I had a great question asked on that webinar and I'd like to read it for you and then answer the question. The question was, hey Andrew, look, there's a lot of talk these days about the US dollar and it's going to decline over the next 12 months. Which US dollar pairs would you recommend using to take advantage of this potential decline? Fair enough question, you'd think. So my answer was, well, you cannot trade that way. You just cannot, because it means that you are now having a predefined in your mind, you are set on the US dollar falling. And it's quite a dangerous way to trade because, you know, how does anybody know what's going to happen? Give you some prime examples on this over the last number of years. So I've been trading for nearly 17 years. And over that time, to be honest, actually, when I started trading, the US dollar was talked down massively at that time. You know, everybody was talking up the euro, talking up the pound, talking down the US dollar. And that's not really happened. You know, within certain times over those last 17 years, yes, the US dollar's declined, but then it's strengthened. But the problem is you cannot have that bigger picture idea. And, you know, back when I started trading, the monthly non-farm payroll, as it was called back then, the US monthly unemployment data, the US jobs news back then, all the time was like terrible. Huge numbers of job losses and people were saying it's the end of the US dollar. You know, the euro's going to take over, the new euro, all the, you know, amalgamated countries, it's the new thing to do. We've got to be onto the euro. So, give you some examples. That back then, you know, the euro got as high as 1.60. Got very, very high, the euro against the US dollar, 1.60. And then from mid-2008 onwards, if you look at a monthly chart, overall, all it's done is fallen, like I mentioned just now. Yes, there have been times where the euro-US dollar has gone up and therefore the euro strengthened, the US has weakened. But if you take the bigger picture, since mid-2008 when the euro-US dollar hit just on 160, all it's done since then is fallen. So that tells you that actually what's happening is the euro is weakening and the US dollar is strengthening. So if I had that bigger picture view back then of the US dollar as weakening and declining, for the last 12 years, in general, I would have been wrong. So very, very dangerous thought process to go into that. Another example, the pound US dollar. Back in 2007, it went over 2. So the rate of the pound US dollar was over 2.000. Went over that level. And then it crashed to 1.14. So all it's done is the pound dropped, the US has strengthened. And again, everybody said the US dollar would strengthen, everybody said the US dollar would weaken, and all it's actually done, again, bigger picture, and there's been fluctuations, yes, within that time, but bigger picture, the pound's dropped, the US dollar has strengthened. And then, of course, we add Brexit into that, and everybody again saying now that the US was going to probably strengthen against the pounds, therefore now the pound's going to weaken. But if you look at what's happened over the last month or so, the pound US dollar has actually strengthened. So now we get this complete confusion. Now we're looking for, with Brexit, you know, it's all happened and Britain's by itself. The pound's going to crash even more, yet the last month to right now, at the end of July 2020, is telling us that the pound's now coming back with strength again. So put all that into a big mix together. What do you get out of that? Well, you can basically get out of that for me, as a technical trader, I am trading completely and utterly what the charts tell me. Why? Well, because it then takes my opinion out of it. You know, my opinion on what's happening to the US dollar, or the guy that was on the webinar today, his opinion that the US dollar is going to weaken over the next 12 months, it might. But until we get to July and August 2021, we don't know what we're talking about right now is going to be true or not. But what we can do is look at the charts and see what the charts are telling us. Even if you wanted to trade longer term like monthly charts and weekly charts, you still need to look at what they are telling you and trade accordingly to that. I think if anybody just suddenly took a position on any of the US dollar pairs for the US dollar to weaken and just did it right now, first of all, why would you do that? Secondly, how are you going to manage that? Thirdly, which pairs are you going to trade? Because if you think that the US is going to weaken over the next 12 months, you really need to be sure that the currency you're trading against is going to strengthen. Now, I don't see a huge amount of strength right now in the Australian economy over there. It's not looking too good. The New Zealand economy is not looking particularly great right now. So Europe's not looking great. Japan's, Britain's in a bit of a mess right now. Interest rates in Japan are negative. Switzerland's the same. So which pair are you actually going to trade if all you want to do is say the US dollar's going to weaken? Makes it hard, doesn't it? But you can go and look at your charts. You can identify trends. You can identify pullbacks. You can identify reversals. And by taking those positions as a technical trader, you are trading what you see, not what you think. It's a big difference.